Do not misread the next major space infrastructure IPO. This is a capital market signal that space, connectivity, and future AI compute are converging into one strategic stack. The visible story is launch. The deeper story is control. Who controls the route to orbit? That is the question executives and boards should be asking now. In every economic era, power concentrates around the route others need: railroads, cloud platforms, search engines. Now the next strategic route is orbital. If a company controls the route, launch, logistics, and broadband, it only needs to control access to the layer others depend on. That is leverage. AI changes the space story because AI is physical. It requires chips, data centers, and massive amounts of power, water, and land. Earth-based infrastructure sits somewhere and consumes something. When Earth becomes constrained, capital looks for the next battlefield: orbital AI compute. The upside is massive, but so is the uncertainty. Space-based AI faces real challenges: launch costs, maintenance, radiation, and commercial economics. This IPO asks investors to value what a company might control tomorrow. The market funds the route before it is fully proven. That is the power move. Now connect this to the broader AI IPO wave. Together, they tell Wall Street that AI is becoming a public market infrastructure cycle: models, cloud, chips, and satellites. This is the new stack, a machine built on growth stories and enterprise dependency. Wall Street loves a control story, but the trap is obvious. Markets may pay today for infrastructure that takes years to prove. Wall Street funds the future before it is proven. Main Street often buys the dream after it's priced, and always feels the bill. Someone always pays. The winners in the AI economy will control choke points. Launch is a choke point. Power is a choke point. Data is a choke point. Control the choke point, make others depend on it, then charge for access. If leadership doesn't analyze this strategy, they are watching it happen to them. Boards must stop treating this as market entertainment. Are your AI vendors dependent on infrastructure you do not understand? What happens if model access or pricing changes? What is the fallback plan? If you cannot answer, you are walking in blind. The AIPOC framework is direct. Identify exposure in your dependency chain and prove the use case before you scale. Govern readiness. Deploy AI only when the enterprise can control cost and manage vendors. That is 2030 readiness. Everything else is a bet on someone else's empire. Here's the hard warning. Empires are built before certainty, when the route is scarce enough. Control the dependency chain or be priced by it. For more executive briefings on AI governance and 2030 readiness, visit AIPOC.ai and subscribe to AIPOC Powered on YouTube.